Debt Management Office is conducting a T-bills auction of 141.7 billion naira today. Traders at Axis Bank say the market will remain quiet as market participants shift their attention towards the auction and await its outcome. Franklin Ebomah, Treasury Team Member at Axis Bank, joins me now to discuss this and much more. Franklin, thank you so much for joining us on the show today. A whole lot of focus is on today's T-bills auction. Talk to us about the size of this auction and the forecast subscription rate we might likely see pan out.
Okay, yeah. Hello, David. Thank you for always having me. So for this auction, we expect the DMO to offer about 141 billion across standard maturities. That is the 91, 82, and 364. It's our view that this auction will be oversubscribed and rates to decline marginally from previous auction closing at about 6% for the long-dated papers. This is based on the current liquidity in the system, which is currently over 800 billion, and where the bills are currently trading in the secondary market.
And talking about liquidity, it's anticipated to continue to rise. But at this point in time, let's look at leanings across the T-bills and bond curve. At this point in time, your forecast for the rest of the week and into the next week, we are inching into the half-month period.
Yes, that's correct. Currently now the system is at watch with liquidity. Over OPR and overnight rates are about 0.8% and 1.25%. So that gives you an indication of how thick the liquidity is. And based on that, we expect the market to still remain cautious as market participants are keen to see how the CBN and the regulators will play towards policies on driving rates up.
And talking about yield rates, how do you see things panning out in the coming days across the bond?
Well,
yes.
Yeah, overall, we expect a quiet session and stability in the market in terms of rate.
Okay, now, what are investors supposed to be looking out for more? Now, we're seeing 2028, 2050s, and 2053s recording some improved offers as well. Tell us what's also driving the buy interest we're seeing in the June 2024 maturities as well.
It's just a market appetite, but generally what we're seeing is actually a cautious trading sentiment, right? You are aware of what has happened in the FX space, and investors are expecting a bit of a reaction in the fixed income space to see rates go up. So based on that, there's that cautious approach towards trading. After we have a bond auction next week that we expect them to offer, and we also have coupon payments coming in. And based on that, we expect a lot of system liquidity, and for that reason, we expect a cautious trading approach.
And talking about the naira value now, just yesterday in the parallel market, we saw it hit that low of 800 naira to the greenback. Do you think we might likely see that consistent dip? Because at the I&E window too, we've recorded quite some dips here.
Generally, the market is still volatile. There's based on willing buyer and willing seller, so we'll just expect the rates to trade at its current levels.
Okay. Franklin, thank you so much for your time. That was Franklin Ebomah, Treasury Team Member at Axis Bank.